Hello everyone, Jeff with OptionBoxer.com. Today I have two trade ideas using both fundamental and a technical approach that I've created over the many years I've been trading. Let's take a look at what we can expect from these assets in the next few days or weeks. Before we get started, as always, understand I'm not a registered financial advisor and this video is not a recommendation to buy or sell any security or place any trade. The information provided today is for entertainment or education, and you should always conduct your own research or contact a qualified professional prior to trading or investing. First, if you're interested to learn about my trading strategy, please view the videos listed in the description. They'll walk you kind of through the step-by-step process that I use to find different trades and how I go about analyzing those trades. Second, if you like this or any video I've created, please do like and subscribe to the channel. Everyone helps, and I appreciate those of you that have already done so. Now, without more delay, the first trade idea my scan picked up was an iron condor on Activision Blizzard, ticker symbol ATVI. The 52-week range is above $11, making this an interesting target for a neutral position like an iron condor. Outside of the steady decline from August until November, this asset seems to trade happily around the $75 per share mark. You can see around $75, price has fluctuated up and down, seemingly returning to that level just about every time. Of course, the big risk here is what Activision's share price will do in the months leading up to their merger with Microsoft. If many of you know that Microsoft is planning to buy Activision, and there's some court battles and some different things going on that may hinder that from happening or kind of delay that from happening. Taking a look quickly at an article I found, you can see Activision Blizzard's merger with Microsoft is to be completed by 2023. But in another article I found, you can see here it says Microsoft loses bid to pause gamers lawsuit. It looks like not only is the FTC attempting to block Microsoft, so are a number of gamers, or kind of a class action lawsuit of sorts. Right here it says Microsoft said in court on Thursday in California that it would not close the merger at least until March 31st. So that kind of gave me a little more confidence to say, okay, I could probably take a trade here in Activision and feel relatively secure that price isn't going to gap up wildly or gap down wildly, at least until there's more news about what Activision is going to do, or what Microsoft is going to do with Activision. From that, I think it's relatively safe to trade here as the courts battle it out to determine if Microsoft's allowed to proceed with their purchase. Should Microsoft complete the deal, they'll pay $95 per share. Should the deal be blocked in court, Activision shares will likely fall. We don't know to what level, but I would assume if the merger is blocked, I would assume Activision prices will fall. In the meantime, Activision options are trading at a premium. You can see here the IV rank is at 98%. With the unknown trajectory of Activision with the Microsoft merger kind of looming, taking advantage of that could make sense in the next few weeks with the heightened volatility. Taking a look at the Analyze tab for this Iron Condor trade, you can see about a 60%, just shy of a 60% probability of profit at expiration. If we fast forward just 2 weeks, to the 4th, you can see if price was to remain relatively stable and didn't move much, we would take a nice percentage return off of this trade in a relatively short period of time. Should volatility also decline, the cost to buy the spread back will quickly become cheaper as well, so that only helps the position. Finally, not considering the Microsoft deal and just looking at Activision's financials, my investment thesis is to wait to purchase this company. Sales growth is good, and so is their debt profile from my assessment. But that said, the thesis is to wait when considering all the fundamental data that I use. Couple that with the unknown status of their deal with Microsoft currently, peak volatility levels over the past year, and a price chart that has been range-bound since the announcement of their deal with Microsoft, I think we get more of the same unless some critical news is released during the life of this trade. What do you think about Activision? Let me know in the comments below if I'm way out of line taking a neutral trade on Activision during this uncertain time, both in the overall economy and for this company. Next up, my scan criteria uncovered a potential bullish call spread in NRG Energy, ticker symbol NRG. NRG shares tumbled a few weeks back when they completed their $5.2 billion purchase of Vivint Smart Home. That was certainly costly in the short term, but NRG seems to believe this will only make them more profitable in the years ahead, as they also just announced a 7.9% dividend increase as well. From a technical perspective, NRG is near the 2 standard deviation channel, and if you've seen my standard deviation options trading video, which I've linked in the description as well, you'll know I like it when assets have reached a deviation channel boundary and have then turned to cross over the 9 EMA line, which we can see also just happened right here on Friday. However, I really don't have the slightest clue what the overall market will do this week. It looked like last week we would continue the bearish decline, but Friday seemed to change the vibe as SPY climbed over 7 points on the day to close both above the 9 EMA and the 200 SMA, or at least right at the 200 SMA. Looking again at NRG, the RSI indicator and the TTM squeeze indicator look favorable to take a bullish position here at this time. Fundamentally, let's take a look at my fundamental analysis. Fundamentally, outside of the expense to purchase Vivint, nothing much has changed with NRG. They aren't a high flyer, being in the utility sector, so any bullishness will be relatively modest, with the stock trading in a 52-week range of only 16 points. Or said another way, it's only been as high as 8 points or as low as being down 8 points. For my assessment, the yield is only more attractive with the recent dividend increase. Their debt levels are acceptable by my standard, and my overall thesis at this time is to buy. Finally, if we take a look at the Analyze tab, we'll see we have a modest 29% probability of profit at expiration. If price does reach out and touch this 1 standard deviation channel above 34.50, we can see that at that level we will have made approximately $43, which is well over 100% return. Also, if price doesn't reach out and touch maybe that extreme level or that optimistic level, we're only risking $28 or 28 cents on this trade. So it's hardly a position that I think will break the bank to place the trade. Given the attractive setup here from both a technical and a fundamental perspective, now could be a good time to take advantage of some near-term bullishness in NRG. Trade carefully, though, as it seems that each day in the overall market we slingshot from people saying we're in a recession to we're about to start a new long-term bullish run. Well, with that, I want to thank you for watching today's video. Remember, please do your own research prior to entering any position. These trades can fail, and I repeat, they can absolutely fail. And they aren't intended to be a recommendation, but rather an attempt to highlight my process for those that are interested to see it. If you did find value in this content, please hit that like and subscribe button to help me grow this channel and share some valuable knowledge about Jesus first, but also my simple approach to trading the markets. Thank you again for watching, and until the next video, take care.